From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 24th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. We're starting here on the USDCHF, a dollar franc. Of course, over the weekend, we had some French news election information, and the market has gapped quite a bit lower from where it closed up on Friday. Closed up here right around the 99.60 or so level. On Friday, we gap lower all the way down here into the 98, the upper 9800s, the orange shaded area that you see here in the middle of the chart. We've seen support here before. You can go back here to the left-hand side, bottom of the black and red trend line. You see supported to this orange zone between 98.85 and 99.05 before. We've even seen it right here in the middle of the blue trend line where it was on the way down, gapped a little bit lower and then turned around and went back higher. The question, of course, is, are we going to look for reversal now that we've seen that gap and reversal? Are we going to look for further reversal and this to turn back higher again, or is this going to settle out underneath the 99.60 level, the blue shaded area, and start working its way back down? We don't know that, so we need to watch for evidence and trade setups in both directions. Let's go ahead and take it on down to the 4-hour time frame. So as we can see, let me get this green circle out of the way if I can here. As we can see, there's the gap lower. There's Friday's close here, right around the 99.63 level. The open of this week's candle, the bottom of that blue candle, is 99.39, or sorry, no, the open is 9900 basically. So right down here into the orange shaded area. Sudden reversal, and now in congestion at the blue zone, basically where we've seen support and congestion before. For the day today, if we're going to see a continued rise, I would say we need to break above this 99.60 level. Get back above there, and then we might have some confidence in the continuation back towards the parity level. The black trend line, the yellow line here is the parity level in the pink shaded area. If it holds here and starts to work its way back down underneath the 99.40 level, we could be looking for the turn back down to the orange shaded area. Another challenge of the low in the direction of what has been the trend over the past couple of weeks. So this little blue zone might be our area to watch for the day today. Back above it, we start to look for further reversal. Back below it, we look for the market to head on back down towards the orange zone for the dollar franc today. Let's go ahead and move on over to the EUR-USD, the euro versus the US dollar. Again, significant gap on the French election news and the weekend. The market closing on Friday all the way down here. The close was 1.0726 on Friday, and then we see today's open here all the way up at 109.18, the candle way up here at the top. So quite a big gap there, and it still exists. It has not come back down, of course, to fill that gap in. So definitely something to consider as you're looking to take trades here on the euro. The extreme volatility and the big gap that we see here. A breakdown of this orange zone. Take a look back, follow that orange zone back in time. We see resistance here. We see black circle on the left, resistance. We see blue circle on the left, support. So we know we've had a decision zone right around that orange shaded area before. Sitting on top of it for the next couple of days might give us further evidence that we're looking for this to continue to pressure higher. Now, there's not a necessity for it to come down. Now there's this expectation that it could fill the gap, so we'll watch for those trade setups. But as long as it sits on top of this orange zone, I don't think it's necessarily a sure thing that it's going to come back down. So watch for the continuation higher. Now we do have some news from the ECB this week that could, of course, affect this currency pair as well, and may send it back down again towards the bottom of that gap. But anyway, the orange zone is your support, blue zone is your resistance. Further down, we know where our next support levels are. Let's take it down to the 4-hour time frame, and of course as we get down here, there's that similarity where it's come back down and just gone into congestion in the orange zone, sitting within and on top of it. I would suspect we could be looking for it to go make another run back at the highs, getting back below it. I think that's the trade setup you need. If you're looking for reversal to go back down and fill in the gap, I think you needed to get through 108.30, and it's a very similar situation. I'm actually going to take this little blue circle here. You see a gap here where the blue circle is, and eventually it got back underneath the orange zone. So if you take a look here where the blue circle is on the left hand side of the chart, You see the gap, the market went above, got back underneath the orange zone, and then began the free fall. That's what we need to see over here on the right as well. Back underneath the orange zone to increase our confidence in reversal to go back down. Until it gets underneath there, looking at support between 1.0830 and 860 here for the euro dollar. Looking over on the GBPUSD, not much has changed actually here on this currency pair since Friday. We've been talking about this little black box here for the past few days, and nothing's changed. We're in resistance at the yellow zone, 128.4075. Support into the orange zone, 128 or 1.2800, 1.2770. So we're kind of stuck right now inside this area of congestion. Of course, we'd like to look for a reversal on the backside of this big bullish run here. If we look for a reversal, it needs to get down underneath 2770. Continuation, though, we're back above 2875, which is the top of this yellow zone. So we're looking for one of those two things, and maybe even bringing that down towards 12840, the bottom of the yellow zone, where we have seen consistent resistance. So one of those two things will give us a trending direction. Until that happens, we're just bouncing around this congestion. 4-hour time frame doesn't change our viewpoint. There it is right there, just congestion here between the yellow and the orange zone. If you're a buyer, you're looking probably closer towards the orange zone, as close as possible there. Minimizes your potential risk for buying because the risk is a breakdown. If you're a seller, you're probably looking closer towards the yellow shaded area to give you an opportunity to get lower risk and higher potential reward. But if you're waiting for a trending move, it's the breakout of this box in this congestion zone that we'll need to see for the pound dollar this week. Taking it over to the USDCAD, we've seen consistent resistance on this pair at the yellow zone at the top of the chart, 1.3490, 1.3510. We spoke about it on Friday, actually, as resistance and a potential reversal point. Well, we've already seen it come down a little bit towards the green zone. Take a look. Here's this resistance right here. So right now, we're finding support, as you might expect, at this historical resistance right here where the black circle is. So that resistance giving us some support. If it's going to continue to go lower, what does it need to do? It needs to break underneath that green zone. That's 134.20, 25. It needs to get underneath there if it's going to go lower. If it doesn't and find support here, like it has resistance over here on the left, then we might see it back at the yellow zone. Now that doesn't mean once it's at the yellow zone that you want to buy it, because it would be under resistance. If you look back here, let me just take that same black circle and move it back to the left right here, where we saw the market go up, touch the yellow zone, fall to the green zone, actually come up again and touch the yellow zone before that big fall. So it's very possible, not a guarantee, but very possible we could look at another second touch of that yellow zone before falling back down again. So not a guarantee. It doesn't mean you want to buy towards the yellow zone, but definitely watching for that second touch of the yellow zone. Otherwise, a breakdown of the green zone looks for it to go lower. How do I know that? And that's looking right here. There's the congestion at the green zone, final breakdown, and continue to go lower. So that's what we want to see. If we're going to see it go lower, it needs to break the green zone. If it's going to retest the yellow zone, of course, that's what we'll watch for also. Another touch of the 34.90 or so level before it goes back down. I don't think there's any significant yet reason to take the long, other than the fact that we're sitting here at support. Maybe if we look at the smaller time frames, we could look for some support and reversal. But at least right now, I think going short is still going to be your directional purpose here for the US CAD, and keeping an eye on, of course, the breakdown of that green zone to be your next opportunity if it doesn't go up and do the second touch of the yellow shaded area for the US CAD this week. Moving over to the US yen, a significant gap higher, well above the blue trend line. We had the blue trend line there last week, the black box down here showing us our congestion zone. That's actually from last week. We see that congestion between the orange and the purple zone. Significant gap above the purple shaded area, significant gap above the blue trend line. From the low 109s down here on close on Friday up into the low to mid 110s, so a significant gap higher. If we're going to take a buy, let's go with that first. There's two reasons to buy it. It either holds here at the yellow zone or falls back to the purple zone. Those are your reasons to buy the currency pair. So it needs to hold here. And I'll watch for a couple of days to hold here at 110 before I would just randomly buy it, because we have this significant gap. If the market's going to come back down, fill that gap, of course, we'll look for the breakdown of the yellow zone. Getting back underneath it, heads back down towards the purple shaded area. Let's take it down to the 4-hour time frame. Take a look. We're in congestion. The market's trying to figure out what to do right now. It's trying to figure out, do we want to continue this upward pressure brought on by the large gap here, or do we want to look for a reversal and a turn back lower? And I think, again, 110.10, 110.0, that's your breaking point. If it gets underneath the yellow zone, underneath 110.10, then you're back down to the purple zone. If it stays above it and even gets back above 110.35, you could even look for the continuation of that run, and no guarantees of a fill of that gap. So definitely today watching for the possible opportunity, but that's the breakdown of 110.10 to give you that clue that it's going to start turning back down for the dollar yen today. Let's take it on over to the AUDUSD, another currency pair with a significant gap higher. Let me zoom in one time, make this easier to see. There it is. You see the blue box here. We've studied that over the past couple of days where it found resistance here. So again, if you're a buyer for this currency pair, you don't want to buy under the purple zone. Clearly, where the blue box is, even today finding resistance underneath 75.85 or so, underneath 7600, it will be an imperative to break that purple zone if it's going to go higher. Until it does that, it's finding resistance there, and you don't want to buy too close to that purple shaded area. If you're looking for a long scenario, I think it'd be better to look for it down here at the yellow zone, where we've already come back down on today's candle and touched back into that yellow shaded area, and essentially closing the gap from the weekend open. So it's already been closed. That wick right there tells me that the gap's already been satisfied. So if it's going to continue to go higher, we either look for a buy at the bottom of the gap, the yellow zone, or a break of the purple zone. On the other side, if you're looking for it to turn around and go back down again, the purple zone provides lower risk to go short, or the breakdown of the yellow shaded area. Let's take it down to the 4-hour time frame, and there it is. There's the gap, there's the fill, and now we're sitting on top of the gap, the yellow zone 75.55, and trying to make our way back up towards the purple shaded area. Again, you need to be watchful. Don't buy underneath that purple zone. It needs to break it before it goes higher, or break the yellow zone before it goes lower here on the Australian dollar this week. And lastly, moving over to the New Zealand dollar, not quite the gap, a little bit of a gap, but not quite the gap that we saw over there on the Australian dollar. We're just looking at this area right here. Let's just take this blue box and move it up here. Look at this. Support at the orange zone, resistance at the blue zone. That's not much new that we haven't seen for the past week or so. If you're a buyer, if you're looking for this to go long, obviously the best places to do that would be the orange shaded area as your current area of support, or it will eventually need to break above the blue zone. If you're a seller looking for a reversal to go back down and some more strength out of the dollar, US dollar, we look for it to go back down under 70.45, the blue zone, challenge the orange zone 7,000, and a breakdown underneath 7,000, we would look for it to go lower. So right now we're just kind of bouncing and rattling around inside this box. Trending moves will be on the breakout outside, above or below that blue box. Take it down to the 4-hour. Look at this, just bouncing around. Last week we were looking at buys down around the orange shaded area last week. If you stuck with those buys, profit all the way back up to the blue zone. And again, right now we're finding resistance. The gap's been filled, it's been satisfied. If you're a buyer, again, I think you want to get as close as possible to the orange zone to minimize your risk, not eliminate it, but minimize it. If you're a seller, it needs to break that orange zone. Other side of this, if you're a seller, maybe a sell close to the blue zone, but watch the risk above the blue zone, break of 70.60, likely looking for the turn higher again for the New Zealand dollar. I think buying down here to the orange zone would be your best opportunity at the current moment for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.